Well, hello everybody. Welcome to P.B.M. Money. Today I want to talk about a subject that I've not heard talked about before. Everybody just assumes it's a certain number. And that is, what is the best down payment amount that you should do? Now, if you listen to all the people on personal finance channels, they all say they put 20% down. That may be good. But then again, it may not be. As an example, what if you're going to go buy your first house? Let's assume that you're young or you haven't bought a house before. So this will be considered your first house. And you're planning on saving for 20% down. Well, what if you could get a state grant? See, state and federal governments encourage you to buy houses, but to buy real estate. They do it with the income taxes. They also do it with grant programs for down payment. So theoretically, if you got a loan at 20% or 80% of the value, and you only had to put down 5 or 10%, and the state put down the rest, you're still getting the benefits of 20% down, but you only put a percentage of that down. So grant programs, state and federal, are all good for first-time home buyers. Now I want to go down some of the loan options when you're buying a house. And this is the house that you're going to live in. There's VA loans. If you are a veteran, you can buy those with 0% down and no PMI insurance. The state grant, if you have the 20% down, there's no PMI insurance. Also, there's FHA. That will cost you 3.5% down. And there's no PMI insurance because the FHA is behind it. So 3.5% versus 20%. Now, the downside, there's upsides and downsides to each one of these. The downside on that is your monthly payment will be higher. But when you're in a period like we've been in the last 2 or 3 years, with the exclusion of this year, it was basically free money to go buy real estate. I mean, you get a 3 or 4% loan, you could afford to put less down on the same house and still have a decent monthly payment. The USDA also has grant programs. They are usually rural properties, but you can get those for 0% down. I've tried to get those before, and there are so many hoops and so much paperwork to go through, but they are available. And then of course there's the conventional loans. Now a conventional loan can be either one that the bank services in-house, but more than likely they package them up and sell them to Fannie Mae or Freddie Mac. It really makes no difference, except they like to, they are paid a premium for strong loans, and one of the ways that they measure a strong loan is how much down. So most banks will require you to put 20% down. That does not mean all banks. But most banks in the conventional financing want 20% down and 20 or 30-year loan length. However, even with conventional financing, there are banks that will make lesser down loans. So, as an example, there could be a bank that requires only 10% down. It happens. Now, what I've been talking about so far is your first house that you're going to live in. Let's talk about after you get your first house and now you're just going to buy any random house for whatever the purpose. Or your second house. Sell your first one, now you don't qualify for the grants, but now you're just going to buy a house. Again, FHA, 3.5% down is available. Conventional at 20% down. You can get, again, like I said, conventional loans with 5 to 20% down, but you got to pay PMI insurance. There's also a construction loan if you want to build your own house. Those construction loans are done in payout periods. After you get a certain amount done, they release X amount of dollars, and then when the house is done and you move in, they turn it into a conventional loan. They pay off all the contractors, and whatever amount it is, that becomes the loan. Those are available. There is also what's called a DSCR loan, and you can use this for multi-family properties, 2 or more. There's usually some conditions on them. The DSCR stands for debt service, and I can't remember the CR. But it's a commercial loan that does require 20 to 25% down, but the benefit is it has no reflection on your credit rating. Cover ratio, debt service cover ratio, that's what it is. And what that means is the income must exceed the outgo each month, the new loan amount that you're putting on it, and cover a certain percentage, and it's usually 10%. It's basically a commercial, and the 20 or 25% is based on your credit rating, but you could have a bad credit rating and they'll still make the loan to you because it's focused strictly on the property, income and expense, nothing to do with you. Now for investment properties, again, commercial loan through your bank, and those do require 20 to 25% down because they're usually larger loans. Again, you could use conventional loans. You could use the DSCR loan. And for your first couple, you might be able to do it just on a conventional loan with even on investment property if your income to debt ratio is very low. So that is a look at what is the best type of down payment for you to buy your property with. And it really depends on what your goals are, what your cash flow is, what you're looking to do. If you're looking to buy the largest property, then you want to put the least down. Because the larger the property, the more money you're going to have to come up with. But in order to do that, but if you want to have a property that's paid off quickly, then you're going to want to put a larger down payment down and increase those payments so that you can pay it. It all depends on what your goals are. There is no one size fits all when it comes to what is the best loan amount down. When I was young, I did what was called an adjustable rate mortgage. You get in with a little bit down, and every 2 years they take a look at the thing. That killed me. I learned that was our first house when I was very young, and our payments doubled. Our payments doubled on that property, and we were barely able to afford it. So you got to be careful. Know what your goals are. Know what your time span is. Know what your amount that you have available. Plus, you need to keep a reserve in case things go wrong, because trust me, they will go wrong. Been there and done that. Well, that's about all I wanted to talk about. You guys have a great day, a great week, and happy investing.